Ever wondered what Bitcoin is and how it works? Let's dive right in. Bitcoin is a novel type of money. It's digital, decentralized, and doesn't rely on a central bank or single administrator. Unlike traditional currencies, Bitcoin operates on a peer-to-peer network. This means that transactions can be made directly between users, without the need for intermediaries such as banks or credit card companies. Now you might be wondering, how are these transactions tracked and verified? The answer lies in a groundbreaking technology known as blockchain. Blockchain is a public ledger that records all Bitcoin transactions. It ensures the integrity of the system by preventing double spending and fraud. Each time a Bitcoin transaction is made, it's added to this blockchain, creating a transparent and secure record. So in essence, Bitcoin is a revolutionary form of digital money that operates independently of any central authority. Now, how does one acquire Bitcoin and how are transactions made? Well, you get your hands on Bitcoin through a process called mining. Picture this. Bitcoin mining is like a giant worldwide lottery where miners compete to solve complex computational puzzles. When a puzzle is solved, the lucky miner adds a new block of transactions to the blockchain and is rewarded with new Bitcoins. Miners play a crucial role in the Bitcoin ecosystem by verifying and recording transactions. They're like auditors, ensuring that all transactions are legitimate. Every transaction is recorded on the blockchain, a public ledger that's virtually impossible to alter. Now let's talk about transactions. To send or receive Bitcoin, you need a digital wallet. Think of it like your online banking account, but for cryptocurrency. You can send Bitcoin from your wallet to others, and these transactions are confirmed by miners. With Bitcoin, transactions are transparent, secure, and can be made without the need for a middleman. So, you may be wondering, what determines the value of a Bitcoin? Well, it's not as straightforward as you might think. There's no gold or silver backing Bitcoin. Its value is largely determined by factors such as supply and demand. The more people wanting to buy Bitcoin, the higher its price rises. Conversely, when fewer people are buying, the price tends to drop. Market sentiment also plays a significant role. Positive news can boost investor confidence, leading to price surges. On the other hand, negative news can cause prices to plummet. Regulatory news too can have a substantial impact. When a country announces new regulations or bans on Bitcoin, it can cause considerable price fluctuations. However, it's important to note that Bitcoin's price is known for its volatility. It can skyrocket one day and plunge the next, presenting potential risks and rewards for investors. Remember, while Bitcoin offers exciting possibilities, it's essential to approach with caution due to its volatile nature.